What's the step in the first year playbook that's invisible from the outside? The thing aspiring agents don't even ask about.
Um, how tough it is to actually have a competitive carrier lineup. It's almost positioned to where they want you to go after the big aggregators and the contracts that are tough to get out of and negotiate through and whatnot. Or else you're just going to be in a spot that you might have 3 to 5 carriers. Maybe a few of them are non-standard, high risk that you don't necessarily want to be in. And you might get a preferred 1 or 2 here. And being independent, we're supposed to thrive and pride ourselves on the ability to shop around and have competitiveness. But there was times in my agency in the first 2 years that I had to leverage just a few carriers. By few, I'm talking 2 to 4 carriers that I had to grow a book of business, a successful and productive book of business off of just a few carriers before these other carriers would give me the time of day. So I got told when you start a scratch agency, you're starting from 0. So no clients, no revenue, only cost.
Yeah,
only cost. Both in time and money. And what I quickly found out within the building the book of business was that it wasn't until about the first 2 million of premium, so sold premium, that majority of carriers actually started to give you the time of day to talk with you, to entertain a contract, a relationship, or whatever. And so it quickly became that 2 million mark was the goal for the agency. When you hit $1 million, it's amazing. It might open up a few doors, but once you hit the 2 million mark, whether it's through personal lines or commercial, it brings more conversation to the table.
Yes.
But that's something that I can see a lot of, because I feel like most agents enter into it thinking that contracts are very easy to get.
Right.
And it's not the case at all. The only thing that kind of helps out if you're not coming with, a huge book of business, if you're going to start scratch, is your experience. So here I am with a scratch agency, 0 experience, thinking that I can just walk into any of, email any of these reps and they're like, oh yeah, just, sign this paperwork and we'll give you this, give you our brand to sell and, train you on it. And I was told no a lot. And I just had to kind of roll with the punches. It doubled down into who said yes and who believed in us, first. And it worked. It worked really well. A lot of it was our timing too. So, I don't know if there's any questions going over what a hard market is like, because there are soft markets and hard markets to the insurance side, which is brand new to me. Had no idea what it was, but I entered into a very good soft marketed territory, and within about end of 21 to 22, we quickly got into a hard market, and I had no idea what that was about. And that came with underwriting, carrier shutdowns, underwriting restrictions, just enough that can make some agents pull their hair out and figure out where the heck are they going to get business from. And if it had not been for the positioning that we were in, that hard market would have been much harder for us to handle and to go through. And so timing was very much on our side during that time.
Would you be able to explain what the difference is between a hard market and a soft market?
Yeah, so hard market is when, whether it's most of the time it's claims are going crazy, whether it's through natural disasters or through differences in the economy that dictate payout. So like what we had experienced with used car market, during the aftermath of COVID, as the economy was reopening back up, is cars actually held appreciation. And when these carriers are paying out on ACV, well, if your car is actually appreciating or holding its value, those payouts are going to be more, because that's just how they're going. And then on the flip side, when you deal with weather, you deal with fraud. Fraud was a very huge issue these last few years on the contractor side. So when these carriers are also paying out for new roofs, new siding, new whatever, you know, we had these fly-by roofers that would come through and say, yep, we can, you know, do this, your roof needs this, or your roof needs fully replaced, and maybe it didn't. And that's just, it's just terrible how bad integrity can be out there. But, you know, these carriers are going to do what they can to at least assess what they feel is a problem. And so when a lot of the fraud occurred, and I'm learning this from my roofing clients, my other contractors that are in the space, car salesmen, all kinds of people. So you had supply chain shutdowns, supply shortages, used cars holding depreciation, you know, just a lot of fraudulent activity going on the homeowner side through bad contractors. So when all of this kind of hits at once, these carriers have to figure out how to prevent losses, you know, the best they can. And it's them protecting their book. And unfortunately, when a carrier goes into protection mode, it's going to affect the consumer and agents like us. And so we had carriers that shut down new business for an entire year. We had carriers that changed up how they do the roof payouts on a much earlier basis. We've had carriers that just, you know, reformulated their algorithms. And so like what's new with the insurance world, I mean, not necessarily new, but more in our face these days is it's all algorithm attized. So when you plug and play our clients into these systems, it might, you know, one thing that this carrier might want just derails the whole, you know, the whole quoting process. And you might find yourself having one client thinking you have, you know, 8 people to shop around, and through a hard market, those 8 dwindle down to 3. And then do those 3 make sense for the price, or, you know, is it better for the client to just hang tight? So, soft market is nearly everybody's hungry for business. They loosen underwriting restrictions. They reopen their products. Some of them even refix rates to where they can lower. And everybody wins in a soft market. And hard markets, there's a lot of outflow that you can use. So what I found with the bigger agencies during a hard market is the reshop game. Really picked up, because as everybody's rates are going through the roof, everybody wants to, you know, figure out how to minimize the damage. And sometimes, you know, reshop people will go to a different agency. See ya. But so I think we capitalized, our agency specifically capitalized on a lot of the reshop market that was just going on. And it doesn't matter if it's captive or if it's another independent side. We were just positioned well to handle that reshop game, and we weren't big to the point to where we ourselves were dealing with that specific battle. So it was all new business to us during the hard market aspect, and I'm sure the next hard market will be much different than the one that we experienced.